to you. I mentored with multimillionaires. I learned a lot of different things from them. One of the big ones is how they think. They think completely different. But number two is they're obsessed with two major things. Number one, they're obsessed with protecting what they've earned. They know how to make money. They want to protect it. Number two, wealthy people want to keep more of what they earn. So protection and keeping are two different things. It's two totally different skill sets than earning money. So those are the two big keys that I'm going to talk about today. I'm not going to get too deep into protecting money. I'm going to get deep on keeping more of what you earn. How many of you make what you make and you want to keep more of it? Let me know. How many of you want to keep more of what you earn? You want to pay less in taxes. You want to do it legally. You want to do it morally, and you want to do it ethically, and you want to do it the way the IRS wants you to. But how many of you want to keep more of what you earn? What's up? I saw a Challenger flyer in there. Iowa in the house. The Stash You Know, Arizona in the house. Guys, let me know where you're tuning in from. How many of you want to keep more of what you earn? Me. Okay, here we go. You bet. Now, guys, I'm going to drop some stuff on you today. It may mess you up. It may jack you up a little bit, okay? Yeah, you bet. CT Monroe says he wants more money. Here we go. Okay, so I'm going to show you some stuff. Now, I'm actually, so behind the scenes, what's up, New Jersey? What's up, Cali? Squirrel Wrangler. Britt in Wisconsin. What's up? What's up, Stash You Know? Hello. Plain White wants some. Okay, so what I'm doing is actually behind the scenes, I'm recording some content for a tax course that we're coming out with. I'm partnering with a bunch of CPAs, mainly Alicia Hoffman. She's a CPA. Huntsville in the house. I love it. I'm partnering with a couple of CPAs, but mainly with Alicia Hoffman. She's a CPA that I've worked very closely with for many years. She specializes in finding those tax strategies that are legal to us. We just don't know about them. You know, like, how many of you are just up on Google in the middle of the night searching tax code? Steven in Kentucky. Welcome. Nobody. Like, I'm not. I mean, sometimes I am because I'm kind of a weird about this. So I'm going to film a course behind the scenes. So I'm going to get through some stuff, but feel free to ask your questions. I'll do my best to get to each and every one of them. So if you've been on my lives before, you've heard me read this quote. And you're going to see some kind of glare for TikTok, but the camera behind is set up to catch this. So y'all are just kind of coming along for the ride. So take good notes. I want to read this quote to you. It said, this is by the United States Supreme Court. The case, this is an actual case that went to the Supreme Court. So the Supreme Court has ruled on this. I'm going to, there's a precedent, and you can write this stuff down, you can Google it, you can learn this stuff on your own, okay? United States Supreme Court, Gregory versus Helverine. Here's the quote. The legal right of a taxpayer to decrease the amount of what otherwise would be his taxes or altogether avoid them by means which the law permits cannot be doubted. Did any of you have any idea that by law you can legally reduce your taxes or altogether avoid them? Anybody have an idea about that? Did y'all know that? Right here, altogether avoid them by means which the law permits. Is that crazy? Challenger Flyer. I've got a call with Alicia in a few minutes. Have to bounce. I love it. Alicia's going to rock your world, man. I love it. Alicia's amazing. So, by law, you as a United States citizen, as a taxpayer, you have a legal right. Guys, I want you to Google this. I'm shaking my iPad. Gregory versus Helverine, 293 U.S. 465. This is a United States Supreme Court ruling. By law, they are telling you and me as United States citizens we can legally reduce our taxes or altogether avoid them by means which the law permits. Which leads me to my first really big point I want you to understand. So I want you to catch this. I want you to write it down. I want you to Google it, look it up, all that stuff. But I want you to catch this point. The United States tax code has 77,000 pages. Right out of the gate, how many are overwhelmed? Like, oh my God, the tax code? 77,000 pages? What? I'm out. I'm tapping out right now, right? Here's the crazy thing. Only about 30 pages out of that tax code are how you pay taxes. The remaining 76,970 or so are how you legally reduce your taxes. Like, seriously. Because God knows, I would not be reading through 77,000 pages. You know, and this is the first big point. The Stash You Know, great comment. This is the first big point. Because there's 77,000 pages, you can't really count on a CPA, every CPA, to be just as skilled in knowing how to lower your taxes. So even if you have a CPA, I kind of I feel for them because they're not going to know all the specific tax strategies. What happens with any kind of career, but CPAs included, like when they graduate college and they get their first job, maybe they're working for a construction company doing accounting or doing bookkeeping. Well, right out of the gate, it makes more sense for them to get another contractor as a customer than to go into another area, right? So they get stuck in a silo. They get kind of like insulated from all the tax changes and how to legally reduce taxes and all of those things. So you can't blame a CPA. It's not their fault. What you can do is interview and look for CPAs that can help you do this, that can help you legally reduce your taxes as low as possible. I want you to think about this. Think about this. Now, you've got an income, right? So you're making money. So let's say this is your income. Well, your expenses, a lot of times, they're butting up against each other. What is the biggest expense that you think you have? So think about it. Let me know in the comments. So you've got your income, and then you've got your expenses, right? You've got your mortgage, you've got daycare, you've got the cost of your car, you've got groceries. What is the biggest expense that you've got? You got your income, yes, but you've also got this list of expenses that eats away at your income. And a lot of times, how many of you are like this, right? You're like, income, expenses, paycheck deposited, expenses, right? Right? Taxes. Taxes, seven-figure business, thinks taxes. Mortgage and car, taxes. The stats you know, taxes, question mark, right? You know, like your dog does. Taxes? Food. Mr. Right, I love it. Dude, you and me both, brother. I'm a good eater. Dogs, kidding. Mortgage, I love it. Insurance. Superman, what's up, Superman? Yourself is the biggest expense. That's a good point. Health insurance. Mortgage and taxes. What's up, Superman? Okay, so everybody kind of get your answers in. What do you think is your biggest expense? You've got your income, and then you've got this expense. And a lot of times, it's butting up against your income, right? Like, as soon as you get paid, how many of you, as soon as you get paid, that money's gone? Like, before you get paid, the money's already spent. You just needed to get here to go buy the thing, right? I was that way for a little while. I get it. Yeah, the people who said taxes are correct. And it's not about right or wrong. It's about awareness. Now that we're aware, taxes are bigger than your medical expenses. I'm going to get to that in a minute. Your mortgage or your rent and your groceries combined. So go with me on this. Think about this for a second. If you've got your income and then you've got these expenses, right? If taxes are your biggest expense, well, if I can reduce my biggest expense even a little bit, even incrementally, that's going to give my biggest gain. Are you with me on this? That's the one big domino that you can focus on, you can push over, and it's going to free up more time. Because we've only got so much time, we've only got so much energy, we've only got so much effort. What's the one thing that I can focus on that's going to give me the best pound for pound return? I want you to think about this. Anytime I'm coaching business owners and I'm helping them on the 4 levels of business, lead generation, conversion, retention, and ascension, one of the things I always talk about is what's the one big domino that's going to get you there. Another way that I say that is you want to get leverage. Inputs don't match outputs. So true leverage in anything that you're doing with money, business, anything like that, is where your input does not equal your output. Okay? The stats you know. Dang it! I was hoping you were wrong. I'm sorry, man. I'm sorry. So think about this. The leverage in a way that you can experience it is when you get in your car. Like, the input doesn't match the output. You hit the gas pedal, you barely flex your calf muscle, you wiggle your little pinky toe or whatever you do, right? And then your car goes 70 miles an hour. What you did does not equal what you're getting in return. How many of you are with me on this? So that's leverage. Now you understand leverage. Now, what you want to have is leverage in everything that you do. The input that I can put in versus the output that I receive back, I want those always to be mismatched, where I'm getting more out than I put in. Taxes are the way that you can do that. Like, you can cut coupons to try to save 50 cents on a gallon of milk, or by law, you can decrease your taxes that you owe to the IRS or altogether avoid them by means which the law permits. How many of you are picking up what I'm putting down? Are you with me on this? Is this huge? Now, check this out. I'm going to give you 3 big strategies on how you lower your taxes. Big time. So here we go. Number 1, I want you to see, I really want you to understand like what's going on here. If you could just lower your taxes by $1,000 a year, like I'm going to such a low number because I know this can be a new concept to some people, and I've been doing this for over 15 years. So this is not new to me, but I'm going to $1,000 number because I got to get the people that are like, wait a minute, how, and go, love this, thank you, absolutely. I'm going to get to it, but I got to get you to understand why it's worth you. Taxes are so boring. Oh my God, throw up. I don't want to talk about taxes, but I've got to get you to understand this, and I'm going to use a low number to get you to go with me. But then I'm going to show you it's really much bigger than that. So what if you could lower your taxes by $1,000 a year? Just $1,000 a year. Are you a CPA? No, I am not. I have a bunch of CPAs in my organization that work for me and with me. So no, I hire them, I pay them, and then I teach what they teach me. But they do all this stuff in my businesses. So if you save $1,000 a year, and by the way, guys, I'm going to give you tax code. You can take the tax code to your CPA. That's the CPA language. Check this out. Let me fast forward to some stuff. Look at this. So Google this: United States Supreme Court, Gregory versus Helvering, 293 U.S. 465. My English teachers would be so proud of me because I'm citing my work. I'm going to give you tax code. Back to the whiteboard. Let's go. Gets notepad. I love it. What's up, Scarlet Secrets? So I'm going to cite my work. You can take the tax code that I'm going to show you on the 3 big ways you can reduce your taxes. You can take it to your CPA. You can take it to your accountant. You can Google it yourself and fact check me. You with me on this? But get the lesson. So what if you could lower your taxes by just $1,000 a year? $1,000 a year? Dude, that's less than $100 a month. It's super conservative. But if you did that early, you want to get these advantages, you want to get these skills early. That's what I did when I bought my first house at 20. I bought a piece of crap house that I had to fix up because I wanted to learn the skills on a fix and flip. Because I knew at 20 years old, if that taught me the skills on a fix and flip, those skill sets would serve me for life. Are you with me on that? So the same thing with tax advantages, you want to learn it now before 2021's done. So you can apply it to 2021. If the calendar moves again to 2022, use it again in 2022. Every year thereafter. If you do that for 30 years, check this out. If you do it for 30 years, this is just a compound interest calculator on Google. Anybody can do this. I know you can't really see it, but I'm going to describe it to you. So this says you put $1,000 in your first year. This is just, don't worry about all this. I'm just showing you the value. And then you do $1,000 a year after that. If you save $1,000 a year on taxes for 30 years, at just 7% interest, that's $108,000. $108,000. Are you, what? So if you can lower your taxes by $1,000 a year and then you reinvest that in yourself or your savings account, your retirement account, whatever you're doing, I'm not going to get into that today. That's $108,000. And that's less than $100 a month. On average, yeah, for 30 years. On average, people save $300 to $500 a month. I'm showing you $87 a month or whatever this is. This is super conservative, okay? Now let me show you this. What if it's, I'll come back to that. I'm gonna come back to that. I wanna keep some of y'all with me. Okay, we're gonna fly to here. So this is another guy. This is Justice Leonard Hand. He was United States Court of Appeals. Yeah, there you go. That's put in the S&P 500. 7% is very conservative. If you haven't invested, that may not sound conservative, but that's a normal thing. Here's what Justice Leonard Hand says. United States Court of Appeals, right? There are 2 systems of taxation in our country. One for the informed, one for the uninformed. What category do you think you are in? According to this justice, there's 2 systems. One for the informed, one for the uninformed. Which category, let me know in the comments, which category do you think you're in? Do you think you're in the informed on the tax savings, or do you think you're in the uninformed category? Let me know. I'm gonna show you some stuff. Oh my gosh, guys, I'm about to drop some bombs. Oh my gosh, Alexa, resume. Oh my, TikTok might shut us down. So y'all gotta be taking notes quick. They might be shutting us down. Uninformed. Do you think you're informed or uninformed? Uninformed, and every time I ask a CLA, I'm dismissed. What's a CLA? Are you in Canada? Non-informed. Please inform me. Uninformed, uninformed, uninformed. That's all of us. CPA, okay, I'm with you. That's all of us. I didn't learn this stuff in school. I didn't learn this stuff in school. I've got your attention. Pay attention, absolutely. Dig into being the informed team. All of us can learn this. That's why I teach you the principles of wealth. Anybody can learn this, not just me. I'm gonna teach you this stuff. I was uninformed, but not anymore. Absolutely. Nobody cares more about your money than you. Nobody, no financial advisor. Nobody cares. CPAs, they don't really care. With all due respect, They don't have time for that. Nobody cares more about your money than you. So we're gonna get informed together. Are you ready to get informed? Are you, Alexa, off. I know, I get fired up. I love me some music. Are you ready to get informed? Let's do this. And if we're talking money, we gotta play some Pink Floyd. So, Justice Leonard Hand, there's two systems of taxation in our country. The thing you've got to understand is that the first mental thing you've got to get through, and I want you to take note on this. This is so simple that it's overlooked, okay? I was lost, but I found Will. I appreciate you. This is so simple, but it's so overlooked. Because it's like, what? You've got to understand what the tax code is built for. And I'm going to give you something right now, and I'm going to prove this to you. How many of you, let me know this, how many of you think the tax code is a bad thing? Like, be honest. Let me know in the comments. How many of you think the tax code is bad? Like or you've got negative feelings about the IRS, or you think that taxes are there's this super negative thing, or how many of you have negative emotional feelings when we talk about taxes? Let me know in the comments, and be honest. I felt that way too before. I felt that way too, especially when I was uninformed, when I was uneducated. It's confusing. Confusing's a legitimate. Confused, yes, absolutely. There's no way, you feel lost. You feel confused. You feel overwhelmed. Stress. It seems corrupt, but definitely necessary. I used to, when my hubby was 1099, very evil those taxes are. Negative. I definitely, negative feelings. It's meant for us, but no one knows how to use it. It's designed to help, but only if you understand. Well said. Me, I pay every year I filed. Okay, so there's some legitimate, only if you don't know what you can do with it. Yeah, absolutely. So I want you to think about this, and I'm going to prove to you that the tax code is actually there for your benefit. Now, I talked about the 77,000 pages. Only 30 pages are how you pay. The rest of it is how you don't pay taxes, legally. So let me prove this to you. So, and I want you to Google this. Take note of this. Google it. Fact check it. During the most recent stimulus package that passed in the United States, they increased. Now, this is for business owners. Okay. They passed it used to be, as a business owner, you could legally walk into a restaurant, have a business conversation and a business meal, and you can deduct 50% of that, 50. So if you spent $100 on your meal, you can legally deduct $50 off of your taxes. Is everybody familiar with what a deduction is? Let me go ahead and explain that while we're here. Let me walk you through what a deduction is. Some of you are going to know that, some of you aren't. So let's learn together. Okay. So it used to be, as a business owner, and I'm gonna talk about a lot of this stuff. Now, as an employee, this is gonna be tough, but I'm gonna show you how to do this. So I can deduct 50%. So this is what meals used to be. So if I was a business owner, I went into a meal and I had a business conversation. I'm trying to sell something. I'm trying to talk to them about a business deal, whatever the thing is. I can legally deduct 50% of my meal, okay? The IRS, during the most recent stimulus, increased this number to 100%. Why would the IRS increase my deduction at restaurants? Why would that be important? And let me give you a clue. It's 100% deduction. So if I spend $100 at a restaurant, I can legally deduct $100 of that meal, 100% of it. Why does the IRS want me to go to restaurants and spend money? Why would that? I'm going to give you a hint. A lot of businesses stopped getting traffic because of a pandemic. So why would the IRS increase the deduction? What are they trying to get me to do? To stimulate the economy. Yes. Are restaurants hurting right now? All of this stuff you can Google. I'm just showing you, I'm just helping you connect the dots. You with me on this? Because they want us to stimulate the business of restaurants, because restaurants are hurting right now, right? It has never been more obvious. This is the best example that I can give to you to prove to you, yes, spend money at restaurants, to prove to you that the IRS is trying to incentivize you to pay less tax. Because when you pay less tax, it moves money. When money flows, the economy is moving. The economy is doing great. You with me on this? This has never been more obvious, and that's why I'm giving you this example. You can look up the stimulus. They increased it from 50% to 100% to go to restaurants, because restaurants need traffic. They need money. Are you with me on this? This is a big time deal, and that's all the way through 2021, and I think 2022. but just go for this year. So let me explain a deduction for you. So the first big thing, and I want you to write this down. The first big thing is that the IRS tax code, where do you live and are you in search of a best friend? Hey, guys, make sure you follow me. I do live and I do 2 or 3 hours. I'm in Austin, Texas. And let me know if y'all are new here. I'm going to drop some tax savings bombs on you. I'm really going to help you. If you let me know where you're tuning in from. We got people from Nebraska, Iowa, Florida, all over the place. I'm going to show you the 3 big ways to lower your taxes. I'm probably going to do an hour and a half to 2 hours. I'm going to drop some bombs on you and really help you out. There's a link in my bio. If you ever want to get notified before I go live, I will text you 5 minutes before I go live. What's up, Philly? What's up, Cali? Georgia in the house. I'll text you 5 minutes before I go live, and you can unsubscribe at any time. Texas, baby. Pennsylvania. Chicago. Oh my gosh, I'm so sad over my last year taxes. I got a pen and paper. How many of you are sad about last year's taxes? And you want to fix and make sure 2021's better, right? So, guys, and if you've been on my lives before, Mama Bear, Who Flung Do, The Stash You Know, oh my gosh, CT Bays, Durbo, everybody that's on my lives all the time, that's on my text message list, let them know. Do you get value out of these things? Like, is it constant mind blow? Like, always helping you out, right? We're going to drop some stuff on you. So before we get going, guys, before we get going, let me explain what a deduction is, okay? So let's say that you make $50,000 in a year, okay? There's 2 things in taxation. There's income, which is this first line, okay? So this is income. This is what you were paid in your pocket, $50,000. Now let's say that you have deductions of $25,000. Okay, so that's a minus sign, right? So a deduction is, like I just gave you an example of, if I walk into a restaurant as a business owner and I deduct 100% of that meal and I spend, like this is a crazy example, but just go with me. If I spend $25,000 on restaurants and meals and business expenses and I deduct that from my income, even if this is my W-2 job as an employee, how many of you are W-2 employees? Even if this is W-2 employee money, and this is like side hustle money, this is me trying to get a business off the ground, and I'm taking some losses my first couple of years in business. Well, my income, which is my green, my deduction, which is my $25,000 in business expenses, lowers, this is the key point, my taxable income. So there's 2 types of income according to the IRS. There's income and there's taxable income. So this is the big one. So we're just going to do some really quick, fancy math, right? If I make $50,000 in income and I deduct $25,000, well, hey guys, drum roll. I'm telling you, I'm a math wizard here. My taxable income is $25,000. I'm going to give you 3 huge deductions on how you can lower this stuff, right? So instead of paying taxes on $50,000, which is the actual amount of money that was deposited in my account, like the money that you actually got in your pocket was 50 grand. But the taxable income is lowered to $25,000. So if you do just that and you're in a 10% tax bracket, I'm just doing simple math so everybody goes with me, you would save $2,500 because you're not paying taxes on this amount of money. You're going to deduct that money. So instead of paying 10% on $25,000, you're going to save that $2,500. Are you with me on this? Does that make sense? Now, if you're in a 20% tax bracket, it goes up even more. You save $5,000 because you're 20% of $25,000. Normally, you would have paid 20% taxes on this $25,000. But because you deducted the 25 grand from your $50,000 in income in a 20% tax bracket, you save $5,000, okay? Does that make sense? So I'm going to give you 3 big keys, but let me go back. So remember when I was telling you, if you save $1,000 in a year, then it's worth like $108,000 or whatever it was. It's this example here. So I said, if you can lower your taxes by just $1,000 a year, on average, it's about $300 to $500 a month. But if you can lower it by $1,000 a year, over 30 years at 7% interest is $108,000. Now here's the thing. If you truly are overpaying in taxes, you've already paid some of this in your lifetime. Is that true? Like, if you don't know what you're doing and you're just kind of winging it and you haven't heard about any of this stuff, then more than likely you're paying some of this $108,000. Now, what happens if the example that I just showed you, where you save $5,000? If you save $5,000, same time period, and you grow it at 7% interest through compound interest, that's $543,000, ladies and gentlemen. You see this number? Now, I don't know how much of that is really yours, and I don't know how much time you've got in front of you, but I do know that if we are overpaying, some of that is true. We're just giving that to somebody else. We're giving that to the IRS and overpaying our taxes, and they're using that money, and they're growing that, right? You with me on this? So check this out. Oh my gosh, guys, you're not even ready for this. Okay, so I'm so fired up, I don't even know where to start. I don't even know where to start. Okay, so we get the idea, right? As a employee, so there's really two systems of taxation, like I talked about, informed and uninformed. As an employee, what deductions do we have? Definition of a hero is somebody that makes it look easy. Thank you, Will. Man, I appreciate you, the stash you know. I appreciate you. Thank you. I'm trying. It's so simple. I have to understand it on my level to be able to explain it to you, and that's what I'm trying to do. So as an employee, what deductions do you have? Right? You've got the child care deduction, like the child care tax credit. You can deduct your mortgage interest, right? You've got the standard deduction, right? Yes, and I owe for 2018. I'm so mad right now. Listen, I don't want you to beat yourself up no matter where you're at. It's wherever you're at, it's where you are. First level is level of awareness. That's how you change. You've got to be aware of where you're at before you can change. I just started my LLC and my car lease is up next month. Can I put a new lease under my LLC? Oh my gosh, I'm not getting into that. Today, I'm only going to cover 3. But one of the things I teach in the course that I'm filming for behind you guys, you can't see the camera, but before you sell a home, like before you rent out a home, you sell it back to your business and you take all that money tax free. And then also before you get a car, you can sell a car to your corporation, to your business, in your LLC, S Corp, whatever, all that stuff. But we don't have that many. You can, your contributions to a retirement plan, like a 401k and IRA, the money that you put into those accounts, however much you put into them, up to $6,000 is tax deduction, right? So it's not that many as an employee. And y'all are getting to the point. Y'all are understanding what I'm saying. It really opens up as a business owner. Like everything opens up. It gets crazy. So like mortgage interest, all this stuff, other stuff. But here's the crazy one. I didn't even plan to tell you this one, but if I use my home office, how many of you are working in a home office right now? How many of you are working right now? Shh. I don't mean to call anybody out. How many of you are working in a home office right now? Whether you're supposed to be on TikTok or not. Okay, I want you to think about this. I'm going to drop some stuff on you real quick. This is like some bonus stuff I'm going to give you. I haven't even got to the 3 things yet. I'm always working. I hear you, brother. I work from home. Okay. Okay, cool. Hey, guys, all of us, this is our little TikTok family. We're going to keep it a secret. We're not going to say anything to anybody else, okay? Y'all are supposed to be working. Shh, we're top secret, okay? My lips are sealed. Okay, so if you let's say you're a full-time employee. You're working your job, and you're doing your thing. But let's say you've got a dedicated space in your house just for your business. But my boss loves you. The stash, I appreciate you, man. Working from home right now. So you've got a dedicated space just for your business. So there's the employee deductions, which are only about 4 or 5. It's not that many. The tax code is written for business owners. Okay, and I'm going to show you. Now, if you've got a business, you're going to get a lot of value out of this. If you're not a business owner and you don't have a business yet, you still want to pay attention. Because there's some huge stuff that you're going to learn, and the IRS is really trying to incentivize you to understand that being a business owner is good for you and it's good for the economy as a whole. But if you've got a home office space as a business owner and you're using that area just for business, let's say that you do the math and there's a calculation the IRS gives you and you figure out it's 20% of your home. What really gets crazy is you can deduct 20% of your internet, 20% of your utilities, 20% of your, like all kinds of stuff. I'm Googling, I can see y'all, what is the, like the gif of Jim Carrey? They're just banging away like from Bruce Almighty. That's what I picture you. Expense it, yes, expense it. Guys, think about this. As an employee, here's what happens. You get paid as an employee. And then before you get paid, who gets their cut? Right? Before the money hits your account as an employee, who jumped in there? Who jumped in there and was like, hey, That's some of mine. Who was that? Somebody got their cut before you got your cut. Right? You got taxed before you got the money. As a business owner, it's totally different. Uncle Sam, yes. As a business owner, you get paid directly from the customers, the clients, whoever you're helping, right? Then if you rent an apartment, you can still deduct your expenses. It doesn't matter. It's home office, home being rent, or yeah, if you rent, same thing. When you're a business owner, you get paid from the customers. You spend what's on your business, aka deductions. You spend what's on your business. You take somebody out to a restaurant to try to sell business. You spend business supplies. You do this. You do all this. Whatever's left over, then you're taxed. The employee, tax-wise, being an employee is miserable. Nobody cares about you. From the tax perspective, I care about you. That's why I'm here. But from a tax perspective, they don't care about you because before you even get paid, you're taxed. That should tell you who's the priority. Who is that priority on your paycheck? If you don't even get it first, right? Yeah, we went through that the other day. Before you get paid, that's called income tax. Then you buy a thing, what's that called? That's called sales tax. And then you own a thing, what tax is that called? That's called property tax. Doesn't it make a difference if you get paid mostly cash on a side hustle? Okay, I can't answer that on here. The IRS does not like to talk about cash. So, all that stuff. And then, so you got property tax. And then what's it called when you own a thing for a little bit and then you sell it for a gain? That's called capital gains tax. So I got paid my $1 on my income, but before I got my income, they took a tax, and then I take my $1 and I go buy a thing at the convenience store. They tax me on sales tax, but Mama Bear, I got you, just not here. You with me? And then I pay a sales tax, and then I walk out and I fill up my car with gas. I pay gasoline tax. I get back in my car where I paid vehicle registration, licensing fees, my driver's license. There's taxes on those too. And then I drive my car to go buy a house. I buy the house and I pay property tax on that house. And then I've got some stuff that I own, and I like a stock or something that I own, and then I sell it after 12 months. I pay capital gains tax on that. Like, are you kidding me? You're already getting taxed. You're already getting slammed, right? That's why you've got to understand the tax code. So like, there's all kinds of stuff that you can do. Like all the stuff that you're buying to furnish your apartment or your house, that can be business stuff. Not all of it, a percentage of it. There's so much more, right? Services performed. You can write off your clothes. Like if you just put your logo. Guys, how many, ladies and gentlemen, boys too, how many of you like Lululemon? Dude, I've got a friend, she spends $1,000 a month on Lululemon. What? She says it's the most comfortable work attire ever. Did you know that if you put a little logo on it with your company, you can deduct all your Lululemon? What? Are you telling me? Yeah. If you've got a business, you just legally wrote all that off. By law, that's a tax code. It's crazy. Totally crazy. So let me show you some of this stuff. I'm gonna switch gears a little bit, and I'm gonna show you the 3 big taxes, okay? Let me show you this. Okay, so I'm gonna throw this up on the big board right here, and boom. Okay, gotta throw it over here. So we're gonna take all of this and come over here. Okay, so this is United States Tax Court. Like this is an actual document. Keep receipts for everything you're saying. He is on point. I appreciate you. Guys, I'm going to show you. Oh my gosh, I'm going to blow y'all away right now. So this, if y'all thought that was good, I haven't even gotten started. That was my introduction. What's the best to get, an LLC or an S-Corp? Well, an LLC is that's a legal thing. I'm not going to answer your question directly. There's way too much stuff to go into details on that. S-Corp, man, I can't answer that here. There's this tax structure is huge and important. Tax structure is vitally important, but there's too many things in it, like location, all that stuff. But as an S corp, there's some advantages. But let me show you some cool stuff. Okay, so I'm going to come back to this. This is United States Court, Ralph Fram versus the Commissioner of the Internal Revenue, November 2007. I'm going to come back to this in a second. Okay, you're my favorite live to watch. Always learning. I appreciate you. I'm always trying to teach. I appreciate that. Thank you. Okay, so, nope. Oh my gosh, how many of you have kids? So number one, how many of you have kids? I've got 2 kids myself. I've got a 7-year-old son and a 4-year-old daughter. Man, and my daughter's crazy. Y'all need to be praying for me. You're praying for me. Your laugh makes me excited like I'm learning some good stuff. How dare you? How dare you? How many of you have kids? Me, 3. Meeker, 3 boys. Oh my gosh. I got 2. 1 but 19. I have a cat. My man, who's got a cat? 2 girls, 3, 4. Hey, Mondo, I think you should slow down, brother. 4? Come on, they all grown. That's okay. Want to buy my 3 kids? How dare you? 7 years, age 16, 6, 4, 3 girls. Me, 3, 5. I got 1. None. Fit flight nurse. Yeah, if you're a nurse, you're busy. You don't have time for kids. I got 1 here. I got 1. That's energy of 5 or 6 kids. No kids, but I need some write-offs. I need some for write-offs. Okay, so guys, CT Bay's in the comments. He's adopting. If anybody, we're just going to do a little TikTok exchange here. We got all liabilities. 2 kids. I have 3, but I take care of homeless girl with 2 babies. That's amazing. Hey, what's up, nurse? Hello, nurse. 11-year-old girl, 2 boys. Okay. If you want to keep more of your money and you've got kids, this is for you. If you don't have kids, you're like my man CT Blaze, and you're just playing the field, no kids, all good. I got love for you too. 27, 25, 23, 20. You go, girl. All that stuff, right? Hello, nurse. Buy Facebook stock right now. Too early for all that. Brady, how old are you, Brady? Brady, are you a kid yourself? Yeah, it is too early for that. Okay, so this one's going to be for the parents. If you've got children, pay attention to them. It says hire them. Absolutely. According to the United States government, the IRS, 20. Yeah, Brady, you got some time, bro. Don't rush it. Just trust me on that. By law, you can legally hire your children to work in your business. I didn't say I was playing the field. True. Fair enough. Fair enough. So by law, you can legally, I'm going to show you this here in a second. But by law, you can legally hire your children to work inside of your business. The United States Code allows you to pay each child up to $12,000 per year. 12 grand. Yeah, is there an age limit? 18 years old. Yeah, unfortunately. So if you've got 21, 23, that's okay. I mean, you can still hire them, but the biggest advantage is under 18. Okay? So if they're under 18 and they're a minor, this is going to be huge. Now, there's still advantages. It's just not as big of an advantage. So what happens is I've got 2 kids. So let me walk you through this. I'm going to come back to the big board and show you this here in a sec. If I've got 2 kids, I've got a 7-year-old son and a 4-year-old daughter. So I can hire both of them and I can legally pay them $12,000 each. So let's go to the math. So I've got 2 kids and I can pay them $12,000 per year to work inside of my business. Now, if any of y'all have seen my page, I show you how to do that. We talked that it was $15,000 this year. Man, I don't think that's right, but I'm open to learn. $12,000 a year. Now, you've probably seen on my page, I've got this book that I give away for free. There's a link in my bio, but I've got my kids. They package these books up, they sell them. I pay my kids to put these books in envelopes and put the stickers on and the postage, and then my assistant takes it to the post office and mails it out. But I pay my kids to do this. Now, my 4-year-old daughter, this is what she can do. So the job has to be commensurate to their age. I can't have my daughter like running heavy equipment digging ditches, right? Or even my 7-year-old. But as long as it matches their age, you can legally hire your children, okay? Now, and this is the free book that I give away. If you ever want one of these, it's called How Money Works, Stop Being a Sucker. It's not my book, but it's our Book of the Month book club. So if you want to be a part of our book club, you just let me know. We'll get you in there. So anyway, all this stuff. I've got 2 kids. I pay them $12,000 a year. That's $24,000. So because they're employees of my business, I pay them yeah, I do have more. There's a link in my bio. If y'all want the book, if you want the How Money Works book, it's not my book. I just bought a bunch of copies for you. There's a link in my bio. Just pay for shipping and I'll send you a book, okay? Do you have to prove your business has made 12K? No, and so if you want to be a part of the book club, there's a link in my bio to get notified. Just put in your number, I'll text you. It says, get notified when Will goes live. I'm going to notify you about the book club too. So $12,000 a year, $24,000 total. Here's the crazy thing, per year. Here's what's crazy. So I pay my kids $24,000 total. As a business owner, that's a deduction. And what do we learn about deductions? The $24,000 in deductions, that means I don't pay tax on that. So if I'm in a 20% tax bracket, I just saved $4,800. Guys, this is one of like an infinite number. If selling arts and craft considered a small business, yes. Yes. The thing with the IRS is you got to prove your intent to make a profit. You have to prove your intent to make a profit. And I'm going to show you some documentation and some stuff I've got for the tax course I'm filming right behind you. $4,800 per year. Per year. You with me on this? So, $24,000, I'm paying that to my kids. So that's an expense going out the door. But because my children are minors, I control the assets. So I just take it from my business and I put it like in a personal account, right? Preferably in their name. And I put it in like their personal account. So the $24,000 leaves my business. It goes into their personal account and I've got a formal employee agreement with my children, all of that stuff. Because I don't pay taxes on this $24,000, I just saved $4,800 a year. Do you remember when I was telling you on average, I help people save $300 to $500 a month in taxes? This is just one tax strategy on this TikTok Live and nowhere else. I'm going to show you 3. Just the first one out of the gate, I'm saving almost $5,000 a year in taxes. 20% tax bracket. What's up, Chantel? Welcome, Chantel. Oh my gosh. Chantel is awesome. So just this one tax savings alone is $4,800 a year. Guys, let me know. Let me know in the comments. What would you do with an extra $4,800 a year? Like, let's just play around a little bit. What would you do with $4,800 a year? Let me know. Let me know in the comments. What would you do? Like, I'm curious. How many of you would anybody go on vacation? Would anybody go on vacation with that? And then while you answer that, I'm going to throw this up there. $4,800 a year, legitimately. Save it or invest it. Hawaii, underground pool, invest it, put it back into the business, vacation, all that stuff. Oh man, I lost my... Oh, there we go. Roth IRA. Could a mechanic pay his child to hand him tools? Yeah. Yeah, how old is the kid? Absolutely. I'm going to show you, behind me, check this out, guys. Put it back up, small vacation, CT-based real estate, I love it. I love it. Vacation, extra principal house payments, I love it. I love it. Guys, this is what I'm saying. When I'm telling you, you've got your income, and then you've got your expenses, and typically they match up a lot in life. The biggest thing, this is just one tax savings, right? Like, if my expenses and my income are hitting each other, the biggest domino that I can do to get more money back is to reduce my biggest expense. What's my biggest expense? My taxes. So when I lower my taxes, this gap I can use to get financially free. One of the things you're going to learn about me is I'm not about waiting until 65. Who came up with the idea to retire at age 65? That's the dumbest idea I've ever heard. Why am I going to delay living the life that I truly desire? That is an idea that somebody else made up that we all bought into. I wasn't born and like 1 year old. I'm like, Mama, retire 65. No, that's companies came up with that when they had pensions. Pensions it's a promise to pay you for life. They came out about a time, age 65, the retirement age, came about when the life expectancy was age 67. Wait a minute, hold up, I got questions. So you're telling me that I retire at 65, but then I die 2 years later. Oh, I see what you're doing. What you're doing is you're trying to limit what's on the negative side of your balance sheet. You're trying to protect the corporation. Because if I'm only on your balance sheet and you only have to pay my bills on my pension for 2 years from age 65 to 67, that's not about me, that's about you. That's why I'm telling you guys, you've got to learn about the money game. Nobody cares about money, about your money, more than you. So, who came up with this age 65 number? Corporations, to protect their bottom line from the pensions. Why did pensions go away? Because we're living longer than ever. With the advancements in medical and science, the fastest growing segment of our population is age 100 plus. That's why all the pensions are going away. You with me on this? So forget age 65, let's do it in 10 years or less. I'm showing you how to do that by keeping more of what you earn. You with me on this? Here's one thing I give away. Now, this is a thing that I include in a tax course that we're pushing out. We're doing a pre-order. There's only 20 people allowed. I'm going to tell you this later. There's a link in my bio. We're only allowing 20 people in. Let me show you one of the things we're including in that. This is the top 32 ways that your child can perform in your business. You pay them, that's a tax deduction to you. Because they're minors, that's tax-free income to them. Are you with me on this? No, my friend, one of my best friends went to Angelo State. He played football up there. I wanted to play football. I just cheered him on. I was too slow, not smart enough, not big enough. So 32 ways, as a business owner, your company can hire up to $12,000. This is like a play-by-play of everything you need to do to like hire your children. Let me give you some examples from this thing. Let me find my mouse first. Employing your kids also provides several other benefits. Like, so then you teach them the value of hard work. Then you teach them, like, think about this. How many of you are paying your child an allowance, but now you can run through, no, there's no child labor laws. Like, my kids aren't working in a sweatshop. They're packing up my How Money Works book in envelopes, right? All this stuff. And there's a lot of exemptions and stuff like that. Here's how it works. Each child can earn up to the standard deduction. Up until 2017, it was $6,300, right? Under the age of 18, up to $12,000 per year, and 100% of that will be income tax free. Income tax free. Because it's a deduction to my business, and my child's a minor, so the child receives that tax free. Okay? Here's the other thing. Ways to make this strategy work even better. Like, I walk through all of this stuff. The job must be reasonable for their age. How many of you had questions about the age of the child? Like, somebody said 3 months. 3-month-old, the IRS is going to like check, like lock down on you. Like, what are you doing? Oh yeah, the 3-month-old was digging ditches for your electrical company. Get out of here, right? The job must be reasonable for their age. If you hire your 14-year-old to file paperwork or your 10-year-old to take out trash, it should be fine. But if you hire your 5-year-old to operate the warehouse forklift, there's going to be questions from the IRS, right? Okay, so all of this is included in that tax course. We're only taking 20 people for the first initial pre-order. We're going to do live calls with CPAs. What's amazing about that is we're going to teach you all of this. You're going to get access to the recordings. You get unlimited access to it. And at the end of the calls, you get a live Q&A with a CPA. What? Are you kidding me? But here, let me show you this. Top 32 reasons. Now that you understand the benefits of hiring your children, here's a list of possible jobs that you can hire your kids to do. Number 1, make coffee, tea, or other snacks. They can be, if you want to put them on social media, they can be an actor. They can be a model. They can do that for social media advertising for your business. You can hire them for that. All you need is a formal employee agreement. You can Google that. You can Google the formal employee agreement. It's not complicated. They can do voice talent. I've got my daughter. My daughter's more of like the show. Like, she wants to be out there dancing like her dad, like doing her thing. So she's going to do stuff with me on that. Create or distribute marketing materials or brochures. Guys, that's why, so I'm only allowing 20 people into the tax course. There's a link in my bio. If you've got a business, this is for you. If you don't, hang out on my lives and watch tax free. I mean, get so much stuff for free on here. But like distributing marketing materials, that's what they did. You can see my video on my page. When I'm teaching you this example, my kid, this isn't even my book. I just bought it for everybody, and you just have to pay shipping. There's a link in my bio. But my kids package it for me, and they send it. Like, well, they don't go to the post office, but that's commensurate to their age because they're 7 and 4 years old. That's $24,000 that I deduct from my income. That's over $5,000 a year tax savings for me, right? Just from that thing. Search engine, like SEO, like if they're teenagers and they want to learn about computers. Like, think about this. I talked to a guy today. He's got a teenager that wanted to buy a new computer for gaming. How many of you have kids that are into video games, that are into gaming? How many? Raise your hand. Let me know. Anybody get their kids a PS5 or an Xbox for Christmas, or try to get one for them? Anybody? Like, if your kid is into gaming, this guy, his kid wanted to buy a new PC for gaming, right? Oh my God, me. Check this out. Oh my gosh, this is so crazy. So let's say that my kid, I got a 7-year-old, and he's learning programming, all of that stuff, right? If he wanted to buy a new game, a new PC for, I don't know how to do this with Xbox and PlayStation, but trust me, I'll figure it out. And let's say, can you explain a little more taxes on the income? They pay taxes on it. Okay, so I'm going to get to that. Let me finish the computer thing, and I'm going to get to the child taxes. So let's say my son wanted to buy a gaming computer, a gaming PC. But let's say that I needed help in my business for like SEO optimization, web development, maybe I needed some programming, something like that. So he wanted to buy it for video games, but I needed him to buy the computer. I needed to buy the computer for my business. Now, what he's using the equipment for is 100% business, okay? And I can prove it. But I can take I can almost take the exact same thing that we were going to buy. Are you with me on this? As a gaming PC, the PC needs the power to run the games, but the PC also needs the power to do all the stuff for my business. So I can buy the computer for him, and then he can use it to run my business. I just made a tax deductible thing. You with me on this? Like, I don't think you can do that with PS4 and Xbox. I don't know how you do that. So more on the child deduction. So because my children are minors, they don't pay any taxation on that money. Zero money on that. Now there used to be a rule about an S corp. Look at this little diagram. There used to be a rule about an S corp. As an S corp or C corp, you couldn't hire your children. But there's a little workaround. This is IRS ruling. Remember when I showed you this tax code memo from 2007, Ralph Fram versus the IRS? Remember when I showed you that? So there's tax rulings on all of these things. Oh my gosh, I lost my place. Where did it go? Well, I don't know what I did. Here it is. Okay, so the workaround is your S corp or your C corp has a new family management company. The family management company hires the kids. So even if you've got a business structure set up already, normally you wouldn't be able to do it with an S corp. But there's workarounds on this, so you can do all of these things and still pay your children. Guys, this is just one strategy. You with me this? Your kid could earn money for their Roth. Okay, that's a really great point. So let's say that, why did you go live at 2:30? Bro, I know, a crazy schedule today. So let's think about this. I take the $12,000 a year and I pay it to my kids. Typically, if you have a tax-free savings account, like a Roth IRA, like an index account, like all those things, and anytime you put money in a Roth IRA, you lose the deduction. But because my children are minors, they receive that money income tax-free. Because I'm a business owner, I legally deduct that money. I pay my kids $12,000 a year. I deduct that off of my business expense. So that's a deduction. $24,000 a year saves me $5,000. I'm at work hiding in my truck. Dude, is this good stuff? I'm telling you, I'm trying to shout it from the rooftops. This is what wealthy people do. Did I just... And because my children are minors, they receive that money tax-free. Because I'm a business owner, I deduct that. Did I just find a way, I don't know, to make my daycare tax-free and deduction? Did I just find a way for like all my kids' school expense, maybe their sports? I'm the parent. I control the assets after I pay them. This is tax code. This is IRS tax code, but it's 77,000 pages deep. Nobody reads it. Could I also take that money and put it into a tax-free investment for their college savings? 529 is not tax-free, by the way. If you've got a 529, then you want to see my training on what I do every May 29th on why 529 suck. I'm not going to go into that now, but did I just find a way to make a tax deduction for a tax-free savings and investment account? Are you with me on this? This is just one strategy. I told you, the bonus strategy I told you was about deducting your home office expense. And you can do 20% of your electricity, 20% of your internet, on and on and on. Because we know you're on TikTok at home. You can't deduct it all. The other 80% is you on TikTok. Okay, that's strategy number one. This is one you've probably heard about. I've seen this on TikTok a little bit, but I've never seen somebody that has a play-by-play chart on how you can do it. You can take this chart, give it to your CPA, and say, just show me how to do it. Crazy. That's why it's like we're beta testing this stuff. This stuff's already written out. We're beta testing it in the new tax course. That's why we're only allowing 20 people in. Tax-free income from a rental home to a C Corp or S Corp. So there's IRS Section 288. So you don't have to be a part of the tax course. If you're still learning and you're not a business owner yet and you can't really get the full advantage, then just Google this stuff. But if you want to accelerate that and hit those goals, then there's a link in the bio for the tax course. You can sign up whenever. But if you're Googling Internal Revenue Code IRC Section 280A. So think about this. Let me go back to the iPad. Guys, is this valuable? Is this helping you at all? Let me know in the comments. Let me know. I get fired up about this stuff, man. Okay. Boom. Boom. I hope this is helpful. Opens lawn or business, hires 16-year-old, buys lawnmower for my yard, tax deductible on it. Huge help. Very valuable. Awesome. My brother used a Roth IRA to buy 2 houses. Yes, sir. Yes. Okay, cool. So I'm going to drop some more stuff on you right now. let's talk about this. Now, I want you to write this down. It's IRS, Internal Revenue Code Section 280A, aka the Augusta rule. You've probably seen some of this on TikTok. I've seen a couple of other videos of people doing it, but I've never seen people give you a play-by-play PDF on how you can implement it and how you can take it to your CPA or accountant. I recommend you have a CPA and accountant to run all this stuff by, but if you got to do it on your own, you can. You're able to do that. So the Augusta rule is simply that guys, I'm showing you, like we already showed you how to get $5,000 a year tax-free conservatively. If you've got like 4 or 5 kids, man, you can make some bank. Augusta rule is you can legally rent your home up to 14 days a year to yourself. So here's what I want you to do. I want you to hop on Airbnb. And if you're not, like if you're, in the sticks, I'm in Texas, and I'm in Austin, so I'm around people. But if you're not, if you're in San Angelo, this may be a little bit more difficult for you. However, I want you to hop on Airbnb and I want you to do some research and do this in other areas. It doesn't have to be in your area, but just get an idea to understand how much money is really out there for you to reduce your taxes to the legal minimum. It's crazy. You hop on Airbnb and you first do your research. You're gonna look, what is the low and what is the high for a commensurate home that you've got, right? So if you've got a 3-bedroom, 2-bath house, then hop on Airbnb. What is the low for the daily rate? What is the high for the daily rate? Really, to be successful in real estate with an Airbnb, you just have to, the house has to be next to something cool. That's really all it is. Like, especially in Austin. Austin, you by the Formula One track, by 6th Street, by Arboretum, by, Lake Travis, whatever. So the low, let's say the low, man, this is very conservative for Austin. Every place is going to be different. And let me ask you this. Do you have to buy rental property only in the place that you live? Or can you buy rental property anywhere in the United States? Technically, you can buy rental property anywhere in the world. And let's say the high is like 500. Okay, so let's go with the low. Let's say that it's $200 a day. So we're going to take our $200 a day and we're going to multiply that by 14 days. Now, this is very vital. This is different than having a rental business. This is you owning your home, and then you rent your home to your business for 14 days per year. So if I'm a business owner, I'm planning 2021, I want to have quarterly meetings with all my shareholders, with all my partners, whatever. Even if it's just me, I want to rent a place for me to rent a home, to like hold my meetings. So let's say that I can buy for $200 a day, I can rent a facility, or I can rent a place to host my board meetings, right? Instead of doing that, by law, I can legally rent my home to my business, $200 a day, but I don't want to go over 14 days. If I go over 14 days, I lose the tax benefit. If I'm under 14 days, it's 100% tax-free. So 200 times 14 is $2,800, right? Man, somebody math check me. It feels right, but I'm starting to doubt myself, right? Rent to children for 14-day board meeting. Love it. So that's $2,800 that is tax-free income, just right off the bat. What? The last example I gave you, you saved $4,800. This example, I'm being conservative on this. There's all kinds of stuff you can do here, but it's $2,800 that's tax-free, and that's called the Augusta rule. Like, you can legally rent your home to your business pays you, that income is tax-free income. So I want you to Google the Augusta rule. It's section 280A. You can look it up. So take that to your CPA, take that to your accountant. That's number 2. But you know what? That's not even good enough. I feel like we can do better than that. See, let's do this. Let me show you this, okay? Now that's different than a rental property. That is just your place of residence. So let me throw this up here. Like, you really need, there's so many ways. Like, there's an infinite number of ways for you. Is this what wealthy people do? Absolutely. Yep. Okay, here we go. So, like, this is the play-by-play. It's 100% tax-free rental income. This is what's crazy. This is what's really wild. There's a bunch of disallowed deductions, all this stuff, but here's how you do it, right? And then look at this. I even include Internal Revenue Code 288, IRC section 274A1B. So you can take this stuff to your CPA. You can do your own research. You can Google this stuff and find out this is 100% true. That's 14 days of you renting your house to your business, tax-free income. So let's just go over what we did. So we did $4,800 is the first big deduction. That's hiring your kids. We just did $2,800. So that's like $6,400, $6,600. Where is the code that you can hire your kids? I mean, you can definitely Google it, but it is in this document that's inside my course somewhere. Just Google it. Gosh, I don't remember the code off the top of my head, but just Google like hiring your kids to your company or something. You'll find it. It's not hard to find. It's not hard to find. So just Google that. I just don't see it here. But you know what's really crazy? This one, if you thought those two were good, there have to be a paper trail with a rental agreement for the Augusta rule. What documents will you have to show? So with the IRS, it's all about documentation. I would write this down. Who, what, when, where, why. Just try to answer all of those questions. Who, what, when, where, why. If I'm going to rent my home out and it's going to be a board meeting for my business, then I'm going to have an agenda. I'm going to print the agenda. Everybody that's a part of my board or part of my company that's going to attend that event, then I'm going to have them sign in. If I'm going to take notes for the event, I'm going to make a copy of those notes. I'm going to attach it. Like I'm just going to have like, these things really happened. They really went on. I'm not doing it for the tax benefit. I was going to do it anyway, but now I'm going to utilize the tax code to my advantage, right? That's really the big time deal. So it's really understanding that. But this one's what's wild. Okay. So back in 2001, the IRS, let me just show you. Check this out. So here's a tax code memo. The United States Tax Court. Can y'all see this? This is legit. Tax code memo 2007-358. United States Tax Court. So this is an official like IRS ruling on this subject. What they were saying was that this guy, Ralph Fram, is not allowed to write off medical expenses through his company if it's in his name. So how many of you are married or have a spouse, have a partner, like in the state of Texas, I think it's 6 months if you've been like living together? Can you write off jewelry? Yeah, you can write off. There's some interesting rules around that. Like, hold on, let me finish my question. You're distracting me. How dare you? How dare you? How many of you are married? You got a spouse, got a partner, civil union, whatever. Okay, if you're married, spouse, common law married, whatever, you're gonna love this one. So this guy, Ralph Fram, he hired his spouse in his business. And when you hire, guys, this is huge. This is huge, okay? Pay attention right here. You thought the other two were big? This one's crazy. This one, like, I already showed you how to save like almost $7,000 in taxes. This is, so Ralph Fram hires his spouse by law. You can give your employees a benefit where you reimburse them for the medical expenses. Hear me on this. How many of you pay too much in health insurance premiums? How many of you, like, you visit the doctor a little bit, you've got some co-pays, you've got prescriptions. How many of you spend a decent amount of money on health care? Whether it's through the health insurance premium, all that stuff, right? Well, Ralph hires his wife. He offers his wife an employee benefit to cover 100%. It's 100% reimbursement of her medical expenses. So that's health insurance premium, that's co-pays, that's deductibles, that's prescription, that's all health insurance, all health expense, right? Well, Ralph, the IRS said, Ralph, all of this stuff is in your name. You can't do it. Ralph said, you're messing with the wrong dude. So Ralph goes to court with the IRS and he said, it doesn't matter that it's in my name. Because if it's an employee benefit to my wife, and I hire my wife to work in my business with my kids, and the benefit that I offer to my employees is 100% medical expenses reimbursed, which is a deduction to the business. Pay attention, right? So I pay and I reimburse my wife for her medical expenses. I happen to be on her health insurance. Are you with me on this? So let's say we pay $400 a month, $500 a month, whatever your health expenses are, that automatically becomes a tax deduction. So guys, let me know in the comments, and I'm just curious about this, what are you paying per month for health insurance premiums? Like, what is your health insurance cost? Just health insurance. What is the cost? Let me know in the comments. You don't have to share that if you don't want to. It's just numbers on a screen, but let me know. So think about this. I hire my spouse, I hire my partner, they pay the health insurance premium, and $150 a month. So I reimburse her $150. Chantel, $488 a month. So I reimburse her. That becomes a tax deduction to my business. I just wrote off the health insurance premiums. Now, can I be on her health insurance as the husband? Absolutely. $90 a month. You just wrote it off. $180 a month. I pay out $500 a month. Who is that? Daniel. You just deducted $6,000 a year. You hire your spouse inside of your business. There needs to be a formal employee agreement. And then my benefit to the employee is I'm going to reimburse them for their medical expenses. What the IRS tried to get Ralph with, and they failed. Ralph won the case. The IRS said, so the case proves that this is real. But the IRS was trying to be sneaky about it and say, Ralph, because it's in your name, you can't do that. Is it true for copays? Absolutely. The IRS finally, the conclusion of this case, which is the precedent is what you want to understand in law. The precedent is set. Even if it's in your name, even if it's in their name, essentially pay your spouse the medical expenses each month. Yes, absolutely. Now, documentation is very important. Keep your receipts, all of that stuff. You reimburse on the fees and the co-pays, the deductions, the monthly premiums, all that stuff. Right? Right? It's totally crazy. I'm not going to get into the HSA. That's a great question. That's going to be in our course. I'm not going to get into that today, but that's going to be in the tax course. And maybe the next time I do a tax tips on TikTok live, I might get into the HSA. That's a good question. I just don't have time to go through all of it, but that's a good question. I'm going to make note of that. Here's what it is. So this is called the 105 plans. The court allows deductions for insurance in the owner's name. This is the reference guide that matches up with the law that went through, right? Flag to audit. Where is the line between hobby? Oh my gosh, who asked that question? Who asked that question? Lala. Oh my gosh, did we just become best friends? Girl? Okay, I'm getting that next time. I'm gonna get you that on the next one, okay? Oh my gosh. Okay, this is inside of the course too. There's only 20 people allowed in this first one, in the tax savings course with the CPA. Leah, thank you. Thank you, Leah. There's only 20 people allowed in, but check this out. So this is called the 105 plan, section 105, medical reimbursement plan, results for health insurance. This is the play-by-play on how you do that. You with me on this? Here's the case. It talks about Ralph Fram. He operated a farm. All this stuff. Here's the rules to follow. Here's what you do. The key to section 105 medical reimbursement plan. This is how you write off all your medical expenses. Is reimbursement. The key is reimbursement. So if I hire my wife in my business and I've got a benefit to the employee, when she goes to the doctor, give me the receipt back. The copay, give me the receipt. When she gets the insurance bill, she pays it, gives me the receipt, I reimburse her. I just made all of my medical expenses tax deductible. Are you with me on this? So somebody in the chat said $500 a month. That's $6,000 a year that you just freed up. If you're in a 20% tax bracket, that's $1,200 in your pocket. Are you kidding me? Are you kidding me? Google section 105. The key to your section 105 medical reimbursement. Just Google section 105 medical reimbursement. CT Bays, I saw you. Section 105 medical reimbursement. It's crazy. It's so wild. It's absolutely bananas. That's number 3. So we did 7,000 before. We just added another 6,000. That's like $13,000 in tax savings from TikTok Live. What? Guys, anybody mind blown right now? Anybody? Can I give you, is it okay if I give you a bonus? Is it cool? Is it okay? Now, this is, you make taxes fun. I appreciate that. I appreciate that. I wish I could do that with my kids on health. Dude, it's the family. It's a family benefit. What if your kid goes to the doctor? Deduction, reimbursement. You got 2 kids, deduction, reimbursement, premium, deduction, reimbursement. You with me on this? Right? It's everybody, it's a family benefit. It's a family benefit. I'm on there and I deduct my medical expenses too. Okay? So guys, all of this is going to be included in that course. What's crazy about that? I think we're going to do like 10 Zoom calls with a CPA. We're probably going to do multiple CPAs. We're only allowing 20 people in because we got to control the Q&A. So here's what's going to happen. The tax course, there's only 20. We're doing like a beta run to test all of this stuff out. There's only 20 people allowed. There's a link in my bio if you want to be a part of this tax course. Here's what's crazy. You're going to get access to the live calls and the recordings of those calls. It's unlimited access. So if there's new content that comes out in the future, if there's new tax changes, if there's new stimulus bill changes, you're going to get access to that too. Here's what's really wild. Only for the first 20 that pre-order are you going to get to be a part of the Q&A. Because everybody in the future, it's going to be recordings. Are you with me on this? So at the end of the call, we're going to cover like some stuff that we plan to cover, like prepared materials. And then at the end of the call, we're going to go, okay, we're going to open it up for Q&A for the next 30 minutes, the next hour. Then you can jump in and do a Q&A with CPAs. Like you pay, on average, you pay a CPA $200 to $250 per hour, not to do your taxes, but to do like stuff like this, like strategic tax planning. That's included. I think we're going to do anywhere between 5 and 10 Zoom calls. It depends how much content we get through and how quickly. Like that, if you pay, let's go low, $200 times 10, that's $2,000 in CPA phone calls. That's included in the course. Is that crazy? So there's only 20 spots. There's a link in my bio. When the 20 spots fill up, they're gone. And there's not another chance to do the beta, to do the pre-order. I just want to throw that in there. The link is in my bio for the 20 tax course. There's only 20 people. Right? Is tax planning a write-off? Absolutely. You write off your CPA. You write off all that stuff. Absolutely. Can my small hobby farm be a business? I do deduct fuel and farm supplies already. Let's get into the hobby thing. This is one of the things that's included in the tax course. One of the big things is called the hobby loss rule. Can y'all see this? Let me zoom in. It's called the hobby loss rule. You can Google this and learn about it. What is the minimum amount? Several spots for the course are already gone. Dude, it's going to sell out. I promise you that. And it's not, and if you're not in a position, don't do it. Hang out on TikTok. But the 20 spots are going to fill. Like it's a stupid, crazy offer. The hobby loss rule. The hobby loss rule is exactly what the question was about. You have to prove to the IRS your intent to make a profit. Now, this is a play-by-play game plan inside of the course that everybody's going to get access to. The hobby loss rule prevents you from deducting a business or investment loss on the ground that you did not have a profit motive from that particular activity. This is the key word, motive. What is your motive? Now, if you can't take a hobby and try to turn it into a tax deduction. A business is a tax deduction. Remember we talked about the IRS is trying to incentivize us to do certain activity that's going to stimulate the economy, which takes the burden off the government. That's why they're like, okay, what's one thing that we can change in the stimulus package? We can increase the deduction for restaurants and business owners and their meals from 50% to 100%. So they're trying to incentivize us. One of the things they're watching out for is what's called the hobby loss rule. They don't want you to deduct your hobby. And there's a couple of things you've got to do to make sure that you qualify. So it's not just a hobby. It shows up as a business. Okay, so the question is, you don't have to actually have a profit, just motive to have a profit. So here's the thing. Yes and no. Number one, you don't get into business for the tax deductions ready. Am I understanding that correctly? Yes. You don't get into business for the tax purposes. You get into business with the intent to make a profit, and you have to prove your intent to make a profit. So if you're going on a sales call, you're doing a business meeting, you write down the who, what, when, where, why, and how. That's what you just, on your documentation. That can be in your calendar. That can be in a physical calendar, like on a notepad. It can be on your Google Calendar. It can be confirmed appointments. It's just documenting your intent to have a profit. That's what you're doing, okay? Will the course be available later for those who can't grab one of the 20 spots? Yes, but the price is going up. This first one, because we're building it as we go, which is why you get access to the live calls. You're going to get it for half price right now because there's a lot of beta stuff that we're going to be releasing as we go. So it's not all ready. You're going to be on the live calls, but it's going to go up in price. But yes, it will be available later, and then you're going to get access to all the recordings, but you also lose the Q&A, right? You lose the Q&A with the CPA, right? Ah, wow, learning so much. This is incredibly helpful. I appreciate you. Thank you. So you have to prove your intent to make a profit, which is what my game plan is about. My game plan shows you how to do that. I've even got an example on record keeping. Like, how do you keep good records? How do you audit proof and bulletproof your tax return, right? When is this? The first recording of the tax course we're going to do in January. There's a link in my bio for the tax training on how to reduce your taxes to the legal minimum. The link's in my bio. There's only 20 spots available. Click on there. You can learn on the page what it's about, what you're going to learn in the course, all that stuff. It's all inside of that link in the bio. But back to the hobby loss rule. There's like these questions that prompt you. Because it's really simple to bulletproof and audit proof. Like an audit, think about what an audit is. Has anybody worked in a company where like auditors have come through? Maybe you work in state government. Anybody have any kind of auditors, not just tax auditors, but any experience with an audit in general? Like, we just need to look at your records. An audit is just checking to make sure you're following the rules. Record keeping in course. I need that. Absolutely. Dude, inside the course, I give you a checklist. So when you watch a training like this where I coach you up, I give you the checklist. So like, if you're like me, if you're a knucklehead and you're like, I don't know what to do. I heard you. It sounded good. What do I do next? Here, take this checklist. And then I'm like, oh, I got it. Thanks, man. Bink, bink, bink. And I just do exactly what it says, right? Because it can be complicated. It's crazy. So the hobby loss rule, like it gives you these prompts. Does the time, effort you put into the activity indicate an intention to make a profit? Right? It can't be like, you can't be a legitimate hobby where you're working on your motorcycle, you're fixing your cars, and you're trying to write off the parts. Like, do you have proof that you're trying to sell this car? Do you have a listing online? Do you have, like, you're going through all of that stuff, which is what this checklist and these frameworks are for. The other thing on the question about, do I have to just improve my intent to make a profit? Yes and no. Yes, you have to prove your intent to make a profit through your documentation, and I'm going to get to the auditing and bulletproofing, but you can't take a loss for too long. I think it's generally 3 years. And then after that, they're going to be like, they got questions. Like, dude, I mean, are you just like a really bad business person? Is this a hobby? Like, what's going on? Right? There's ways to protect that stuff. But auditing and bulletproofing, it's just knowing, when I worked, one of the last jobs I had, I was a contract manager for the Texas Comptroller of Public Accounts. So I taught all the contract managers. Can you tell I teach? I don't know. I'm crazy. I love this stuff. I love teaching like complicated stuff in very simple ways. And I taught all the contract managers across the state of Texas how to negotiate contracts, how to manage contracts, all that stuff. All of those things, right? Yes, that's what I'm worried about. Damn, should have held on for another year. Leah, what are you talking about? Give me some context. That's what I'm worried about. I should have held on for another year. What's the context on that? So anyway, I trained all these contract managers. I taught them all this stuff. One of the things in contract management is about keeping records. Like, you've got to keep records for 7 years after a two-party written contract agreement. I don't know why I remember this stupid crap, but I do. I don't know why. My above comment before that. Let me see. What's up, Hooflung Do? I saw you in there. I just kept everything. Yes, I have 4 binders of 1 year of work, but stopped because it was a crap MLM. MLM works too. MLM is a tax deduction because you're a 1099. So if you're an MLM, you can do that too. Absolutely. Do yourself a favor, pay yourself first, and invest in your financial education and freedom. Amen. Sean, nailed it. That's my big thing. Anybody can learn this stuff. Nobody cares about your money more than you do. It's important that you take control of your financial freedom. Like, that's why I recommend all these books. Secret Self-Made Millionaires Teach Their Kids. Tony Robbins' Money Master the Game. Saving for Retirement. Abundance. This is a great book. Like, I'm not going to go through all of that because we've already got a book of the month club that we're doing. So if you want to be a part of the book club, let me know in the comments. I'll cover that, all that stuff. So talking about tax savings, kind of wrapping this stuff up, the tax code, the hobby loss rule is so important. And it walks you through all this stuff. And then in the bottom, IRS section. Like, let me show you this. Like, legitimately, guys, can you see that? Like, I do. My English teacher would be so proud of me. IRS section 183. I've never cited my work so good. So anyway, man, the medical deduction is huge. So think about this. Through the Augusta rule, how much did we save off? with the Augusta rule, we saved $4,800. Well, no, we saved what was the number? It was like $2,400, right? Just with the Augusta rule, with as a corporation, we rented our home to ourselves, right? That's $2,400. With the children, with my kids, I pay them $4,800. That's like $7,000 right there. That's over $7,000 just right there. Then with the medical expenses, the deduction of hiring your spouse and legally deducting all of that stuff, if let's say you're doing $500. I know Chantel said she's doing like $600 a month in addition to co-pays, in addition to all the other prescriptions and all the other stuff. Well, let's just say it's $6,500 a month. $6,000. So we just did $2,400 plus $4,800. That's $7,000 plus $6,000. That's $13,000 in tax savings on this TikTok live alone. Can I get like the emoji mind blown? Dude, I just showed you how I save $13,000 or more per year on this TikTok live. What? Guys, like, imagine what else is out there. Like, it's not what I've shown you that's crazy. It's what else is out there that's available that you're totally unaware of. So, if you're a business owner, you want to hop on that, right? I missed the first segment, unfortunately. Basically, I just gave away a whole bunch of money, and you totally missed it. So really, this is what I do on my TikTok live. If you're new here, then make sure you follow. You can sign up to get notified when I go live. I give you a 5-minute warning with the content I'm going to teach. There's a link in my bio. And also, the tax course that I'm telling y'all about, all of this stuff is included in that, plus more, plus the live Q&A with the CPA, plus like, oh, it's crazy, crazy, crazy. So we're going to cover all this content. We're going to give you the recordings of all that content. And then at the end of those Zoom calls, you're going to get a live Q&A, which is why we only have 20 people allowed in the course. So if you want to get one of those 20 spots inside of that tax savings course, the link is in my bio. Go check it out and learn about it. If it's not a good time for you, all good. The spots are going to fill up. It's all good. Okay? But I want you to know, like the Q&A alone, if you say, on average, you pay a CPA $200 to $250 an hour to do tax strategy like this. If let's go low side, $200 times 10 calls, that's $2,000 in value just from that. Not even the recordings, not even the play-by-play, not even the checklist. It's crazy. It's crazy. So would it be a benefit to do the course for my small hobby / profitable intent business farm? If you're going to be serious about getting like taking tax deductions, all of that stuff, then yes. I just showed you how to save $13,000 in 3 tax codes. So go look at the course in the link, look at the price of it. Is that going to be worth $13,000? You know what I'm saying? Like Angelo State, what's up, man? Yeah, my good friend, my best friend from high school played college football there for a couple years, and then he went to Abilene Christian. I love that. I wish I had the money, but oh well. It'll take me ages to save up, but I will. Hey, hop on the live. Don't worry about it. Hop on the live. I give away stuff like this for free all the time. Just make sure you follow me. Get the notification in my bio. I don't like if it's not a good time for you, don't do it. Don't do it. It's all good. Hop on my live. I give you a ton of free stuff on here. And then what I would do for you, what I would say is go to the link in my bio, get a free book. All you have to do is pay shipping. If money's tight right now, or go to the library, get a library card, start learning, but you've got to empower yourself. Nobody cares about your money more than you. So if you can't afford the tax savings course, all good. But the principle is empower yourself to get financial freedom. If you want to be a part of our book club, we're going to probably start next week. So get your order in quick. How Money Works, Stop Being a Sucker by Tom Matthews and Steve Siebold. Then get the book. You just have to pay shipping. That's all you've got to do. There's also a 7 Money Milestones like roadmap course that goes with it. That's totally optional. At least get the book. At least start the journey to taking control of your financial freedom, because nobody cares about your money more than you. So all that good stuff, man. If you own a business, this course is a tax write-off. Absolutely. And if you have a business that's operational, and you want to make sure that you're maximizing your tax deductions and your tax advantages to the max, then this is a training and a course that you want to be a part of. You're going to get several moments of one-on-one time with a CPA, with the transcript of the call, with the follow-up email from all the questions. It's going to be like, here's the questions we had on our last call to the select 20 group. Here's the answers to all of them with the citation and documentation that you need. So if you've got a CPA already, you can take it to them. Like, This is the one course I wish I would have had like 15 years ago. Because I'm a knucklehead, dude. Can y'all tell I'm not organized? Can you tell this? Like, look at me. What is this? What is all this? Look, there's like a cable. What's up with the cable? What are you doing with the cable, dude? What? Can you just hide the cable? What's up with the books? How come you have a bookshelf here and a bookshelf here, but no bookshelf here? Can you tell I'm not organized? This is the course I wish I had on tax savings. You know what I mean? What about if you are just starting your business? It really depends. Like, so let me give you this. You're going to get the value out of the course regardless. If you have a business, you're going to get the value out of the course. And you're going to be informed about what you can apply in the future. So even if you're just starting, and this is my whole principle, like why I bought that beat up piece of crap house when I was 20 years old. I wanted to learn the skills when I was 20 because it would serve me longer. You with me on this? So even if you're just starting a business, now I don't know your financial situation. I don't know if it's a good spot for you. Maybe you just want to start with a book, but the rewards you're going to get out, it serves you longer the sooner you learn a skill. Are you with me on that? Can you write off the course? Absolutely. It's 100% tax deduction. Anything to build your financial freedom, I got distracted by the comment. I see you, Mr. Wright. I look forward to it. We got a financial analysis tomorrow, man. That's on fire. I love it. So anything that is used to help grow your business, whether it's knowledge, whether it's a course, whether it's a seminar, whether it's books, all of these books behind me are tax write-offs for my business. I'm a big time reader. That's all tax deductions. So the same thing with courses. Absolutely. Absolutely, man. Guys, I'm about to wrap this up. Was this helpful? Did you learn anything here on TikTok Live? Did I teach you anything that's going to help you, that's going to serve you, that's going to put money back in your pocket, that you can take to your CPA, to your accountant, you can start implementing? I gave you like 3. I gave you a couple of bonuses. Was this valuable? Who flung do? Who flung do? We got another call coming up too, man. Yes, as always. Awesome, guys. Awesome. That's my whole goal. Oh my God. Yes, I love it. Mr. Wright, I will see you tomorrow, man. I look forward to our financial analysis. We're going to dig deep. We're going to get you financial freedom in 10 years or less.